Yo, what's good, everybody? Today is Friday, October 10th. Today I want to quickly run through the bias that we had on price action because it was super scattered and super interesting to look at the interplay of the bigger time frame and the lower time frame together, just how we can interpret information from both of them. So without further ado, let's just hop straight in. So if any of you guys traded today, you probably saw this insanely massive sell-off. Like, oh my gosh, it just keeps going. Like, this is crazy today. So honestly, this was not really, of course, unexpected, right? It came from a little bit of Trump, tariff, China news, all that kind of stuff. So let me show you guys my bias going into today, right? So we opened in the market, and I still don't think my bias was wrong. I just think that I did a little bit of difficulty in interpreting the information, right? We'll get into it. So on the biggest time frame, right, we're at all-time highs. We're doing this kind of slow grind higher. What I see is that today we're back within this fair value gap, right? We had a huge strong rejection from this whole area, retraced the equilibrium of the range, perfectly tapped it, going higher. Now what are we pulling back to? Well, London pulls back to this fair value gap, pulls back to this change in the state. We look super good now, like really good, to go ahead and push straight up and finish this little market maker model. Like, this is a beautiful setup right here. This little market maker model, right about here, and take this trade to the downside. With this being the buy curve of the trade that we're expecting to do. So take the trade to the back to the upside right here. So that looks really beautiful, right? ES even further affirmed this bias by being a little bit weaker, and it actually made an SMT right there. So I'm drawing that in quickly right here to SMT, boom, boom, right? So now you have an SMT divergence to add on to this. This is pretty much everything that I'd want to see to take a really confident long bias, right? But what's the issue? Zooming in lower, let's just kind of look at how the day started, right? How it played out, what happened, and then I'll explain to you guys a lesson from this, right? I'm looking for longs today, right? I'm looking for longs. Market opens right around here. We come down, we don't manipulate this low. We literally just rock here. We rock it on ES about like, what is this, like two, like, bro, this is literally, nah, no way, that's so close. 6 points away from the peak of this, bro. We go 6 points away and then we dump to freaking all-time lows, bro. So what did I get wrong, like, out of this? To me today, I was expecting if we can get some kind of internal model within this price action before taking that high, I don't mind taking a long. That was my bias going into today. So what ended up happening was there was no clean long setup, and I didn't take a long, and I just watched this crazy sell-off, and I was like, bro, what is going on? So the thing that I want to go over, because like you guys saw, that bias was pretty concrete. Like, if you know anything about trading, this is a pretty concrete bias, and I'm pretty confident that high goes ahead and gets hit, right? Why could we potentially have traded and understood price action just a little bit better today? It's all going to have to do with this principle, right? Whenever you have a bias, right, what do? We wait, we have a bias, we have an idea of where price wants to go, and then we wait for the market to affirm it on the lower time frame where we take our entry and we trade in line with the higher time frame skeleton, right? So this was our bias today. To get the market to affirm this, what would we have to have seen, right? Most likely some kind of move like this, right? If we had like an SMT, say the market pulls down right about here, right? We get an SMT on this low, then we start to push higher, make our inverse fair value gap, change the state, new fair value gap. That's when maybe I'm confident taking along like this, right? Beautiful. The market didn't show us that, so I didn't take the trade. That principle, I wait for my confirmation on the lower time frame, but I don't take a trade unless I have everything, right? That principle is very standard. Like, I'm not telling you guys anything new, right? But what I didn't do, and what I'm sure many people didn't do that had that long bias, was this, right? At this point, right, New York Open, 9 a.m. On ES, we are much weaker, right? We're still looking pretty bullish to those highs right around the peak of this, right? With the high going right about here. But we do 100% have a big SMT right here. Either you want to draw it here, or you want to draw it on London or Asia high. It's a little bit unclear, right? But it's very clear that we are much below here, and we definitely want to consider that potential manipulation, right? So I didn't even draw in the SMT today because I was so convicted in the long bias that I didn't draw in the SMT. And another reason why is because whenever there's an SMT that is potentially in the market, right, it's either an SMT or a six sister. The reason you're going to be able to tell if it's an SMT or a six sister is because, say, in the bearish sense, where there's a potential bearish SMT, I'm looking for it to be a six sister. I'm asking me, if this is an SMT, is there a reason for price to go lower? Well, the reason for me today would have been that, is there generated liquidity lower? Yeah, right? That's pretty much the biggest question you ask yourself. Is there generated liquidity or an imbalance below us? And if it's yeah, then there's a chance that SMT could play out, right? If it's no, like if we just have a straight up, straight down move, probably we don't want to go run higher or, respect that SMT. Most likely it's going to just be a six sister, because at times like that, there's no generating liquidity. There's no reason for the market to move lower and actually respect the SMT. So, like I just said, if this move was more so something like this, right, where it was SMT like this getting put in, whatever, I'm trying to look right here, off of some goofy little imaginary high right here, and I'm expecting to see a price potentially run lower like this, I would way much less expect it on here than I would expect it on something that maybe looks like this, right? Where we see price going and doing a whole lot of this, right? Just complete generation, right? If I saw a complete generation, then I would be like, yeah, there's a high chance that now we go ahead and run lower because we want to take out all this general liquidity right here. So today we have this exact structure right here. We have general liquidity. So I might want to be holding that SMT in mind, right? That's the big thing. The second thing that I think is equally as important is, like I said earlier, when we have that potential reason why the higher time frame wants to move, we have the bias, we go to the lower time frame and we look to affirm that bias. What is, in like rudimentary terms, like basic fundamental terms, the way that we affirm that bias is by waiting for our entry model, right? So what's our entry model? For me, it's an inverse fair value gap, a change of state, and a new fair value gap, right? So I wait to get all of that stuff. Here, even though I'm 50-50 in my bias, it's about when you're 50-50, usually you want to wait for a side to get swept, manipulation, your game playing, you want to wait for confluence to stack up on one side and the other side not to look as good, then you want to wait for your entry model towards that side that looks better, right? So what happened here, right? We have SMT, we have potential reason, we have 1, 2, 3, I think ES is even cleaner, bro. We had, let's go. Right here, 1, 2, 3, 4, we had, I mean, in this kind of range right here, 1, 2, 3, 4, 5, 6, like we have a ton of general lows and we have a little bit of inbound price action right here. I think is most notable in this little range, but for the most part, we also have London low resting here. We took all of our session highs, like we don't have Asia high to go hunt anymore. We already took it. The only session point we have intact is that London low. If I see that entry model beautifully in the other direction, that's most likely when I want to take my trade. So taking out ES, which is most likely what I would have done, would have been inverse right here. I think the inverse was much cleaner on NQ, but even though it's still here on ES, I'm still going to hold it in a similar regard. New huge fair value gap. This is real displacement, by the way. And look at two things I want to check out in this push lower, in this small move lower, right? This is the big thing that gives you your bias. Everything can happen before this, but unless you have this, most of the time, there's no trade at all, like 100% of the time. The two things that I really like about this one are, number one, from our point of change in the state. So that would be right here. Geez, bro. Look at how beautiful. How much lower do we go? This is about, let's just say, 6.5 points. We go 14.5 points. We go twice the distance away. That is true displacement. And how long does it happen in? It happens in 4 minutes, right? 4 candles that happens, not in one single candle where it looks like manipulation, not in multiple candles spread out so where it's like 10 candles so that it's just a slow grind lower and not actual actual distribution, right? That's the first thing I love so much. The second thing is that these fair value gaps right here, everyone except this small little dumb one down here, we pretty much inverse all of this, right? So these big fair value gaps right here get inversed. I mean, maybe if you want to include this one in, I think we still end up pushing mostly through it, right? And we're now showing a clear shift in market direction, right? So now, where do you enter? The most sniper way to enter this, which is what, I could have done, not sure if I really would have been to enter at that change of the state. So I would have gotten you like right about here and then stop at this high or this high. And bro, that's like literally a zero drawdown entry. You can take that to wherever you want. To me, the logical take profits here are most likely going to be a trade most likely to these. Probably this would be the most logical take profit to me. And then from there, runners would be London. And then from there, we would take this to right about here. That is a very logical trade to me. The way that I most likely would have entered this is at this point in price, once we see this big displacement, the best point for price to pull back to will be the closest point, right? Because I don't know if this prices want to go fast and leave me, or do we want to pull back, consolidate like we did today, right? So you can either enter this, which is the like biggest, lowest probability, most baller, like perfect sniper, rare way to enter, or you could have entered on this fair value gap, stop at that high, that's still a 4R, or I most likely would have taken this one because to me, where's this fair value gap? This fair value gap is perfectly at equilibrium of the range. So I'll draw this in really fast if I can pull it out. Where is it, y'all? Right here, gone box. This fair value gap is perfectly at equilibrium of this newly created range, right? It's the main one. It's in line with the change. It's where I'm expecting price to pull back to, bro. So this is most likely what I would have taken, and this is a beautiful trade in my opinion. Pretty much almost zero drawdown, a little bit of drawdown, but price is messing around in the range here until we see this Trump announcement. And bro, this sell-off did not stop. Like, that is crazy amount of trade. Like, when you zoom out, it's really crazy how much we moved today, bro. So overall, I mean, this makes sense to me, right? This makes perfect sense to me. And although this model looks super clean, this is one of those days where that intuition might serve you a little bit wrong if you don't react to the market, right? So really just watching the market and literally trading the chart, not your idea of what you think is going to happen. That's what could have made the difference for me today, and I think is a really good lesson to take away for literally any trader. So without further ado, I'm gonna let you boys go. Thank you all for coming on the Friday to watch and educate yourself, continue improving, not just playing around on your Friday, after a good week, bad week, whatever it might be. So without further ado, I'm gonna let you boys go. Hope you guys learned something, and yeah, peace out.